Good morning. This is Manoj Kumar Jain and welcome you all in IndiaNivesh Commodity Research Update. We have seen heavy selling pressure in both the precious metals in yesterday's session as gold prices hit 4% lower circuit and silver prices also slipped more than 10% in international markets as gold prices test the lows of 1450 dollars per ounce while silver prices slipped below $12 per ounce in yesterday's session. Even in domestic market, we have seen gold prices test the lows of 38,400 odd levels, while silver prices make a low of 33,756 in intraday session yesterday. At one point in time, silver prices slipped around 16% in domestic market due to heavy sell-off in global equity markets and other asset classes. Both the bullion contracts also shows pressure due to the increased margin in Shanghai Gold Exchange and selling by international gold ETFs in yesterday's session. Despite US Federal Reserve's cuts key interest rate to 0% and quantitative easing is announced by US Federal Reserve's European Union and also IMF also assured to announced the quantitative easing to support the global struggling economy due to the rapid spread of coronavirus in around 162 countries. But both the bullion contracts unable to get support after US Federal Reserve's key interest rate cuts and hits the lower circuit in yesterday's session. Due to the extreme volatility in global financial markets, we expect the volatility to remain continue in both the precious metals in today's session. Gold prices are expected to hold the key support of $1,450 per ounce in international market, while 1,520, 1,555 act as a major resistance for gold prices in international markets. Even in domestic market, gold prices are expected to be traded in a wide range of 38,400 on the lower side and 40,500 on the higher side. While silver prices are expected to be hold $12 per ounce supports level in international markets, while 13.3014 dollar per ounce act as a major resistance for silver in international markets. Even in domestic market, prices are expected to be traded in the wide range of 34,500 on the lower side and 38,500 on the higher side in today's session. Crude oil prices also shows weakness in yesterday's session and prices plunged around 10% in intraday session yesterday. WTI prices slipped below $29 per barrel mark in international markets and Brent prices also slipped below $30 per barrel in yesterday's session. Even in domestic market, prices fall more than 10% and test the lows of 2123 in yesterday's session. Due to the rapid spread of coronavirus in around 162 countries and quarantine measures announced in most of the developed countries puts pressure on the global crude oil prices as demand is expected to be subdued in next 2-3 months. As per the analysis of one international agencies, global crude oil demand is expected to be lower by 10 million barrels in next 2 to 3 months, and it also puts a pressure on the crude oil prices in yesterday's session. After increasing output by Saudi Arabia and Russia is also putting pressure on crude oil prices. We expect the prices remain trade under pressure and expected to be consolidated in the range of $27 to $32 range in international markets. Even in domestic market, prices are expected to be traded in the range of 1980 on the lower side and 2250 on the higher side. In base metals also we have seen pressure in yesterday's session despite US Federal Reserve keeps it cuts key interest rates to 0% and quantitative measures are announced by the US Federal Reserve and European Union unable to support the base metal prices due to rapid spread of coronavirus. Global demand of base metal is expected to be subdued in next 2-3 months. Despite of China is returning to the normalcy and This is also unable to support the base metal prices in international market as copper prices slip below $5,300 per metric ton mark at LME. Even in domestic market, the crucial supports of 415 is breached in yesterday's session. If prices remain trade below 415 in domestic market, could extend the fall towards 400 to 396 in coming sessions. Even in international market, if the prices slips below $5,300 per metric ton mark, could extend the fall towards 5,220 to 5,200 odd levels. 5,380, $5,400 per metric ton act as a major resistance for copper in international markets. 420 427 act as a major resistance for copper prices in domestic markets. Nickel prices also slipped below 900 odd levels in yesterday's session. We expect the prices remain trade under pressure and expected to be traded in the wide range of 855 on the lower side and 922 on the higher side in domestic markets. Due to the pressure in global crude oil prices, sell-off is also seen in global agriculture commodities, and most of the agriculture commodities hit lower circuit in yesterday's session. Extreme pressure is seen on oilseeds, edible oil, and guar complex in yesterday's session as soybean April contract slipped below 3,350 odd levels in domestic markets. We expect the prices remain volatile and expected to be traded in the range of 3,250 on the lower side and 3,400 on the higher side in domestic markets. Refined soy oil April contract is also slips below 700 odd levels in intraday session, but shows some recovery during the closing hours in domestic markets. If the prices continue to sustain below 700 odd levels, could extend the fall towards 688 in coming session. 722 act as a major resistance for refined soy oil in domestic markets. Guar seed and guar gum prices are also expected to be remain trade under pressure due to the pressure in global crude oil prices. Other agriculture commodities like cotton seed, oil cake, and cotton are also expected to be traded under pressure due to the quarantine measures announced by most of the countries, and it continue to put pressure on the global agriculture commodities. We suggest traders to avoid carry forward position in commodities segment and trade with a strict stop losses with lower quantity. For more updates on commodity research, keep watching IndiaNivesh Research Update. Thank you.